A few announcements I wanted to make. First and foremost, the format to this video is going to change very drastically I believe after this video, potentially this week or the following. It's going to be more like a weekend review video. It will be available at no additional charge to monthly subscribers, who will have access to any and every video I film, pretty much from now until the end of time. Pretty much. And then I'll also have it available as a a la carte option on the this site as well. So those are the announcements. If you believe it or not, some people don't watch every week. It's hard for me to comprehend, but I've been moving over into the subscription model, and if you're subscribed to that, thank you very much. If you're not, please do. I'll miss you, and hopefully you'll miss me too. You never know. So that's the story. I have the link for the subscription service on my Twitter account, @JustinPulitzer. There's a link to that YouTube channel right in there. If you take a look, you can click on it. So let's rock and roll here. So the market is at an interesting level. We all know that the Dow is at 22,000. Very fascinating for those of you who are interested to actually care about the Dow. I mean, honestly, if they wouldn't have mentioned it on TV, I might not have even known. I don't really follow the Dow very much. It's 30 stocks. They're price weighted. It's sort of an irrelevant index, but whatever. It gets the public excited. I do follow, however, the S&P 500, the Russell 2000, and the NASDAQ. So let's start out with a few factors that I see influencing the tape, and then we will talk about the major market indices. So first and foremost, I always like to talk about my 10 market keys. The VIX is sort of like trading like it's broken. It just does not want to go higher, however, and I've mentioned this in a past weekend video, I think that Fed Day low could be the low on the year, that 884. And it would make sense. That's sort of like, a day that could do something like that, a Fed day. It's trying to make some higher lows. It's just chopping around. I would say that the risk in the volatility here is sideways to up. Going in, particularly into September, there could be a debt ceiling showdown. That, to me, is something to pay attention to. The dollar, and I often talk about it in euro terms since they've taken away what's going on here? The ability to, you have to pay for the quotes now, which is really annoying. And I'm not really that big of a dollar trader. If I was, I'd pony up, but I don't really trade the dollar that much. And if I do, I usually use the UUP, which is the ETF. Anyway, the dollar is getting, in Dixie terms, $DXY, is into the reference low area of 91.9. It's possible there's some kind of an overshoot, but this thing is getting way overdone on the downside, and I am expecting there to be some type of a dollar rally throwback. I think that two things happened here. I think that, one, people got very nervous about the French elections, meaning kind of the end of the Eurozone, and when that didn't materialize, they realized that the dollar was too high. And the Fed hasn't exactly been the inflation hawks, or they haven't been very hawkish. I mean, they're kind of a little more hawkish than they would, maybe hawkish light, but they're not very hawkish. And the perceived now of the Europeans is that they may be tapering, so now they're hawkish. I don't really think that anyone is hawkish, to be frank, but I do think that the need for emergency rates is kind of over. And Europe is improving. Their economy is doing better. Low dollar is great for our country, great for the GDP, and I can't imagine them wanting it too high, even though they like to talk a good game. UUP is at the reference low of 23.96. I had said I thought these this area, like around 24s, would be some support, and it seems to be here at this point. So if you're looking for a dollar long, we may get some kind of a flush through like we did with the SLV, but I'm thinking that the dollar is probably going to be due for a bounce in the near future. The bonds are hanging in there. Again, this is the Fed not being all that hawkish there. It's still in a bit of a downtrend, but more of a consolidation. It's made some equal lows, and there's a little bit of a zone here. This 123.15, which was the 2009 crash peak, up to 124.98. We could just say 125 if it makes it easier. That area is a important zone, and a breakout in either direction, I think, will be a go with, meaning if it breaks higher, it can go, you'd want to be long the TLT, and if it goes lower, you might want to not be long the TLT. So that's my, and maybe even short the TLT. As far as credit goes, and I know everyone, it amazes me. You listen to these guys and gals on TV, and they all think they're so smart, but they forget that the bull markets don't die of old age. They die on recessions, and it usually shows itself in the credit markets. You need to not be able to borrow money, and then that's usually what causes the big type of a moves. So I just see this HYG kind of chopping around. It's been making highs, and it's just been in range. Again, I don't get too worried about this until it starts losing the 200 MA. It is pulling back a little bit the last 2 days. I think there's a trade there. You could either be long above or short below for a quick trade. And that's the scoop with the HYG. Oil, which is very key to this, I think is looking like, to me, it looks like it's trying to recover a bit. Yesterday you had a bit of a reversal. We didn't quite get to the channel high. I discussed that in the weekend video of 51. But I mentioned that there are a couple of levels here today that I'm watching. In particular, it's 49.33 and to 49.61. And we closed at 49.61 on the nose. Nobody does the levels like me. And you could take a look. I tweeted out those levels. That's very key. It needs to clear that for more. And if it can, I think the best thing oil could do here is kind of chop around and consolidate a little bit, because it did run up a lot off the lows, and then go, and then it could have a bit of a run that I don't think people would be expecting. XLE was a little weak today. I think that just kind of went up to close to the 100 MA, found a little bit of sellers, but recovered nicely at the end of the day. The end of the day. I'm speaking faster. I'm thinking faster than I can speak. The story, though, is that it's still above the 50 MA. I don't want to get too bearish on XLE or the XLE names until it loses the 50 MA. That had been the kind of the rock solid resistance, and it's now acting as a bit of support, which is good. Exxon also was green all day, even with oil having some weakness. It did have an excess low on the earnings, by the way. Thanks. Someone just said they made some money in that lumber liquidators. Yeah, we had talked about that having a little bit more room. Please give me a shout out on the stream. I always love that, and I'll do a whole retweet for you and everything. That was very well done, by the way. I'll add that to the list. Maybe we'll talk a little lumber liquidators on the fly. So I am thinking that we could have a little bit more to go in Exxon. I'd like to see this thing. I'm short some puts. When Exxon has these plunges, I'll tell you, traders do what works until it stops working. And as amazingly kind of not great as Exxon has been, it has provided some amazing trade opportunities. When it looks ugly, I sell the puts. When it looks pretty, I buy them back. And then I wait for it to look ugly again, and I sell them again. And then I wait for it to look good, and I buy them back. So we now had a look below range and fail. So we should theoretically have a rally up to the high end of range, which is close to 83, 84. So let's see how that plays out. That would also be a 200 MA test, which we haven't. I don't think we've tested since my bar mitzvah. Maybe that was in January, the 6th to be exact. So it might be time. China. China, gotta have your China. I talked about this. I said I thought we would see the 61.8 retrace, which is 43.40, and the channel high is up close to there. It still is on course to do that, but I'd be looking to lay it out up there. I don't necessarily know if you need to be short, but I would be cautious about my China plays, faux shizzle. We got the 158 in the BABA. I said to sell. It's just kind of meandering here. As long as you're above 148.29, there ain't no thing to be worrying about. But if it gets below there, I think we could see the 50 MA, which has been important. The 20 MA has also been important. So if you lose the 20, I think we'll see the 50. We'll keep it that simple. The Baidu. I mentioned in the weekend review before the earnings that I thought the move would be higher, and it has been. The high of the move, which was three sessions ago, if you count today, was to the channel high. I think I had pointed that out and said to sell, and it's pulling back a little bit. So I don't know if this is going to come down for sure all the way, but I can say this. It ran a lot. I was going to use some Scaramucci-like adjectives there, but it ran an S-ton, for example. It needs to hold above 217.97 for higher. Back below there, starts getting a little bit more look above and fail type of a not-so-fresh feeling. I'd probably be DT down to fill if we pulled back to like 200. I'd sell some out of the money puts below like that 188 breakout level. IBB. Let's take a look at that bad boy. Pulling back after getting my one gap fill. It didn't fully get the second one, or the 61.8. I do think that this is going to 339.38 at some point, but this was up a lot. Pulling back a bit. It looks like it's below the 20 MA. So I either need to see this back up above today's high of day, or down closer to one of the fibs, which is like the 50 MA and the 50% fib and the range low are all kind of wound up around 306. I would really love to see this actually have a full, larger pullback to like 301.80, like that whole area. 301.44. That's like the 61.8 of the entire range. It's also the 100 MA, which has been very critical for this. So if you want to be long IBB, I'm down with selling out of the money puts at that strike or below, at or below, what's the 61.8 exactly? 300.67. So one's below 300 or below. If you want to play short, if you lose today's low of day, I'd be cool with buying puts and like doing a spread with that as your lower strike, or some kind of a ratio where you would be selling like 2 times there, buying 1 and selling 2, near dated, of course. Now, one of the stocks that used to be a big time darling on Wall Street that has become loathed is this Gilead. Now, I'm seeing, and I usually do, I had mentioned this a few weeks ago, that I was seeing a real shift in this stock. I think it just finally gotten too cheap, and they realized that there's not going to be too much new regulation. So their peak earnings might be troughing here a bit. Now, my thinking on this is what was the key moving average in the Gildan Age? The 100 and you had a mini golden cross, and I mentioned this, and I call it golden cross light, when the 50 crosses through the 100, and you're about to get one in like the next few sessions where the 50 crosses through the 200. I would be interested in selling like puts on any pullback if it get down to like 72 or like 70, somewhere in that range. I'd be an out of the money put seller of like 70 or 68 or 67 puts. You could even start layering it like you need a pullback though. You don't really want to sell puts after having a 13-point rally. I'd be like into it on a few down days. Today was starting to look like it was going to be a second, but it didn't. It's just hanging tough. I think this thing is going higher. I just think would be opportune to buy a pullback rather than to chase it at this stage. But I do like it. The how do I phrase this properly? The fly in the ointment possibly for the bulls here could be the IYT. It has now made a new high. Look, it had a look below and fail. It ran up all the way to the high end of range, made new highs, and is now pulling back. So you don't just crash after you make a new high. It doesn't really work that way. You have to rally to a lower high and then take out the last swing low, and then you get interesting. It's right now on the 61.8 fib and the 200 MA. So that area must hold. The key levels I'm watching are 164.56, which is the 61.8. I guess you could just mulligan that to 164.23, which is the 200 MA, just that point range. The real range low that I'm watching was 161.58 to 157.65, somewhere in there. And there's a secondary trend line there. If you start losing that secondary trend, and I will go over this in amazing detail in this weekend's review, which you will definitely not want to miss because there are some very large implications if that does break, and we'll discuss that and all kinds of other levels. But that area is kind of the must hold to stay in this like upper consolidation. If you start losing there, the channel low could be in play, and that could cause your market correction. I've been playing this with short CSX. I mentioned this after the gap down below the 50 MA, that if it lost the 100, I'd be interested in shorting. It got the trend line of the mini trend, it bounced, and now it's back below there. There was some news today that there was a train crash, and they spilled a bunch of toxic chemicals, which for sure helped the position. Listen, I'd be happy to have a losing trade if people didn't die. I'll take it because it helped the position, but I really don't like when people get, sick at restaurants or they get hurt in accidents. I don't need the money that badly, and I hope everyone's okay, frankly. So I hope to hear some good news on that. But it did happen, and the stock is going lower. It had run a lot ahead of earnings, and I'm really not looking for this thing to completely fall apart, but I am looking, if it lost 100 MA, I do say that I think it should hit the 200 MA, and news tends to fall along the line of least resistance, and you know my spiel. So 46.93 is the gap fill, and 45.41 is the 200, basically the 200 MA and the range low. And you have a channel low if it were to just do in a straight line down to like 42, which would test the bottom end of the gap. Somewhere between that 45.41 and that 42 area, I will be covering and probably looking to actually sell out of the money puts or to even flip long. Everyone will think the gap is going to fill, but they won't realize that it came down from the top all at once, and there will be a bounce. Yeah. The other recession-killing, the one that kills the recession is the copper. Copper is running. That does not happen in recessions. It happens in expansion, growth expansion more specifically. XLF, strong and high and negating a head and shoulders. You have a head and shoulders pattern failure. It gapped up to the high, pulled back. That was a professional gap, although it did fill that gap, and now it's back up at the highs. XLF looks good. I like it on buy the dips, as I do with JPM. I think that is a $100 stock eventually, although the more I hear people say that on television, the more I want to say I'm sorry, it's not, but I happen to think it might be. Let's talk about the major market indices, and then we'll just only exclusively talk about the stocks that you all mentioned. You know what's amazing? I wrote down everything you guys want to talk about, and Apple wasn't on there? Did you just assume I was going to talk about it? I hope so, because if that's not the case, if that is the case, and that little of you are involved in Apple, this is going to be a serious monster stock going into the end of the year. But we'll get into that in a bit. SPY. All right, so I'm going to be very clear about this. We had that intraday reversal day. When you have emotional days or big expansion days or Fed days, I like to use that range as my gauge. That range low right now is 245.68. I'm willing to give it some wiggle room to 245.01 because that is the breakout from the last consolidation high when we had another one of these bars. So 245 is the must-hold strike for the bulls. If they lose that, it could be troubling. You have a 20 MA that is now above there. You have a 50 MA that is rapidly climbing. Oh boy. So that is, to me, the key. If you want to see range extension higher, above 248 would do it. If you could get above 248, I think you could see 249.03 and, dare I say, 254.41. Possible if we get the blow-off scenario. August isn't the best month for this kind of stuff, though, because there's very low volume. Everyone takes their vacations. It's before the kiddos go back to school. But above 248 gets a little bullish, assuming it's not some kind of look above and fail, and then we'd have to come down to range low, and we'll cross that bridge when we get to it. But anything that can clear and sustain above 245 248 is good. IWM, not exactly behaving as well. I had mentioned this in the weekend video that this was, in my view, coming down to the range low. So that's a big thing. We're a little bit below the 50 MA. I'll have to see if it can recapture that. If the IWM could get back up above 140.86, I'll say this was a bit of a look below and fail. If it continues below the 50 MA, the 100 MA, and range low, it seems in the cards. 138.32 is the 50% fib and was basically the breakout area. 138.17 to me was really the true breakout. So there could be another couple of smackaroos down. If this were to keep going for whatever reason, the trend of this kind of move is right at the 61.8. So 136.93. So if this does keep coming down from, like I said, from all-time highs, I'd probably be looking to get long in there for a bounce play. I'd want to either buy it right on the 61.8 and the trend, or you could always wait to see it hammer first and then go. Sometimes there's a press through. The 200 MA is getting close to that area too, so there's a lot of like support levels just a little bit lower. I think I'd be more worried if this came down, bounced to a lower high, and then started rolling over again. So I never am that nervous on the first rollover or the first pullback off of the all-time high. So somewhere in there, I'd be looking. If you want to play for the short, I'd like the idea of doing. You can do the put spread or a put ratio for that play lower, or you can, like for example, if we're up above today's high tomorrow, then I think the throwback will be back to the highs. So like I said, I need to see it above 140.86. Then I need to see it above 141.82. And then if it clears that, we're back to the upside. If not, I think that there could be a little bit more room lower into those 50% and maybe even 61.8 fib. The bears, I assure you, no matter what the Qs or SPY do, will hang their hat on IWM being weak. That's just how they roll. Whatever happens to be weak, they latch onto and they stick with it. Qs were a bit of a disappointing showing today, even with the Mac Daddy Apple up big league. Again, another really big range expansion day on 7/27. It was a big look above and fail. You've been consolidating for now 4 sessions in there. The more inventory this builds up in like this bear flag type of a situation, the more problematic it becomes. The 20 MA is right there. It needs to hold 142.29. That was the breakout. That day held it to the tick, maybe one tick above. If you lose there, then I think we're talking about fibs, maybe even down to fill the gap to 139. So we're going to have to see how that plays out. That, to me, is the must-hold. Even given Apple, if it loses that, it, to me, would be problematic. The aforementioned Cupertino Killa Apple. So you basically had the potential of a professional gap today. You don't know because it's only day one. Couple of important levels here in Apple. The obvious breakout is an all-time high of 156.65. And the backside of the old kind of consolidation channel, wedge, which I will discuss in the weekend video. That levels, I'll show it in the video. It's a little hard to discuss this way, but you'll see it in the weekend video. Today's range is key. If you were to lose the low, I think you could use that as a stop, and then it would pull back to that last kind of peak. I don't know if you're going to get the full gap fill, although Apple does like to fill gaps. Their numbers were really good. I was impressed. I liked a lot of what I heard, and I think that people will be looking to buy this. If you get above today's high, the problem for me, and I had said this, was two things that I mentioned in the morning today, was, and this was really geared for chasers because I had people asking me, oh, do I buy Apple now? I said, wait to see if it can clear the after hours high, which was 160, and be leery if there is a lower high RTH, regular trading hours. Sure enough, we were a quarter shy, and it pulled back, and it was looking super, I don't want to say fugly because it really wasn't. It was just people were booking profits. That's really what happened. You had people long, as they usually are in Apple, and they booked some profits. So you need to clear today's and the after hour 160. The next point would be 162.39, and after that, if you want to get really heavy, there is some more potential upside, and I'm going to save that for the weekend video because that is a very, very interesting situation that I saw something in options that actually has me leading that to believe that it really might go there, actually. And it's a really big explanation that needs to be displayed properly. So tune in for the weekend video for that, and I assure you that'll be well worth the price of admission. Isn't Mobileye bought out? Someone asked me about Mobileye. It's just chugging up. If someone could type into the chat if Mobileye, I think they were bought, if I recall properly. It's not one I follow that often, but you just take a, if you're in it or you're whatever, you're looking for more, you just draw a trend line from that gap up low. Where was that? On 621, and just draw it up, and as long as it stays above that trend line, I guess you could keep riding it up. But if it is a buyout, I probably would get rid of it at some point. The Baidu, I mentioned Baidu. We already covered Baidu. We covered Mobileye. Covered IBB. We covered the Baba. All right, so let's go through the rest. Square. Let's see. I had mentioned I liked this stock, but I said it was up a lot. Did they report? I think they were reporting today. Let's see. And it was a pop and flop, of course, because it was up already. You know, it's hard to sustain gains when something is up a lot already. I'd like to buy this stock lower. I do think it will. I shouldn't say that I think it'll go eventually higher because I don't know that. But I don't know. This to me, this along with PayPal, which and I by the way think PayPal is better. I think that guy Gene Munster doesn't agree with me, but I've been right on PayPal for a while. So until I'm not, I'll take my street cred on that. If there was a pullback, and I don't know if there will be, but the real breakout in this was 1820, which is to like the tick, the 50% fib. If there's any kind of like flash crash or move in the market back down to there for whatever reason, I would absolutely be a buyer. So if you're currently long, I would use the 2520 or the 50 MA as my stop. Gold, GLD. Let's take a look at that bad boy. I mentioned in the weekend review that the best thing that the bulls could do with this is just consolidate it here up high which they're doing with a not too shallow of a breakout. Now, if it can consolidate for a few more days, if it broke the that downtrend, I'd be interested in maybe buying it. Or the better yet would be to pull back and hold the 50, 100 MA confluence right out there, and then play for a bounce with a very tight stop. So that's my thinking on the gold. Speaking of PayPal, by the way, I had mentioned to mention that. This also just ran a lot, 55, I'd be interested in a right out play. That's roughly the 50 MA. That was the 2 times range extension. There was double tops there. That was a breakout point. I'd be down to sell out of the money puts on a retest of that level. Tesla. I had mentioned today that this was a look below and fail on the 100 MA. We were close to the range low. I actually would have liked this to have pressed fully into 303.48. I would have loved to have seen it run the stops. But I said that this looked to me like actually the same setup as Apple. Whether or not the results were the same or not was another story, but the setup looked very similar. All right, so what now? Tesla is up, right? Yeah, they're up in after hours about the measured move, about $20. I think the expected move is like $22. Believe it or not, the move is not very significant yet. This basically was a move. It's been chopping in a range. You need to see this clear, the 50 MA and the last swing high of 347.5. If it can clear that, then I think it's going to try to float up to the highs. It may make a lower high, we'll have to see, but to me, a higher low and then a higher high, the pattern would start to repair. I'd be interested in that. But the channel that this had been trading in up until it really broke through the channel on 530, believe it or not, the 50 MA is right there. So this could, and it threw back, actually when it came down, it threw back. It was a look above and fail and now below. It needs to be above the 50 MA at this point. When you hold hundreds, you often retest 50s. If you're aggressive, I think you could write out short against the 50. But I'd be more curious to see if this can break through the 50. If it can, then it will go higher. NVIDIA. This is just consolidating up high, right on the 20 MA. I guess you could use the 20 MA as your stop if it were to break that, which is like today's low of day. The 50 MA has been significant there, so I don't think this really is in too big of trouble until you start losing the 50 MA. Autodesk. This was a look above and fail. It's pulling back into range right around the 20 and 50 MA confluence. You could see the 100, man, on the range low if this doesn't hold. It's got to hold today's low of day. If not, I think the 100 MA could be in play. That's my thinking on it. Amgen. This I mentioned in the weekend video that this is just a big range. If you didn't see my analysis in the weekend video, check that out. That is my thinking on that, and I discussed some levels. I don't want to reiterate it. You really need to see the chart for that one. Costco, bouncing pretty solidly off of trend. The 38.2 of the range is 162.5, and then the 50% fib is 166.36. In the past, that range, like 135.68 to 166.36 was key. I'd probably be looking to bail on this bad boy, though, at like the 50, 100 MA confluence. That's like 164.16 to 164.85. That's where I think people are going to, there'll be some money coming out of that. And then I might even try to like rebuy it. You could even try shorting it there for a pullback to the 200 MA. But as long as it can hold the 200 MA on pullbacks, it's all right. Again, if it can't, it's going to go lower, maybe a lot lower. Lumber liquidators. This was up. It had a huge short squeeze. I posted a chart. Like, I'd be looking to bail on this in like another $5. honestly, though, the 38.2 of the entire decline is like up at 52.02. So it could get there and not even be that big of like a relative rally. They shorted this thing. I remember seeing, I think it was Whitney Tilson on TV talking about how this thing is a zero. These guys are getting squeezed in this, and it's probably not going to be over for a while. I'd be a buyer on any pullback at any point to the 50 MA row, meaning right or right out. So that covers what we planned on discussing for the day. Couple of quick announcements. There will be a weekend review video this weekend. Next week, after Wednesday, I'm going to not be around for a little bit. There'll be a weekend video, but from Wednesday to like Saturday, I'm not going to be too available. There may not be a midweek video next week. I actually have to see how I feel. I'm actually going to be having shoulder surgery, so on Wednesday. So please wish me well. For those of you who hate me, you might finally get your wish. But we'll see. I will, if I'm up to it, if I'm sober and not dying in pain, I'll try and do a video on Thursday. It would probably be one of these type of videos, actually. So if I do next week's midweek video, it won't be the new format just yet. It would be the following one. But in all likelihood, there probably won't be a midweek video next week. But I should be feeling okay to do the weekend video with the wrong arm, actually. That should be entertaining. So, but I've been practicing and it's been fine. I'm able to work the charts and stuff, so should be all good. Anyhow, thank you for the well wishes. I appreciate it. If you missed this video or if you want to watch it again, it will be on my both YouTube channels for all to see. Hope it was illuminating. Again, if you haven't subscribed for my service yet, I encourage everyone to do so. The link to that, again, is in my Twitter profile. Thanks, everybody. Have a great rest of your week, and cheers.